The U.S. Securities and Exchange Commission rejected a proposal for an ETF that would directly hold Bitcoin, quashing hopes that a long-desired product would finally gain clearance after last month's debut of the first funds linked to futures of the cryptocurrency. This video is brought to you by Answerly, a question platform that pays you for adding high-quality answers on different questions. The users are rewarded in Answerly tokens, which they can easily convert into dollars or any other cryptocurrency by using one of the exchanges mentioned in the description. Hello and welcome to our YouTube channel. In today's video, we'll be talking about how will Ethereum replace Bitcoin? Crypto and Ethereum moving now. If you're new here, make sure to smash the like button, subscribe to our channel, and hit the notifications bell to get updates whenever we post. Bitcoin ETF season has come to an abrupt halt as the spot-based ETF proposal by VanEck has been rejected by the Securities and Exchange Commission. The Securities and Exchange Commission rejected the application for a long-awaited spot Bitcoin ETF from VanEck on Friday as it remains concerned about potential fraud and manipulative practices in the cryptocurrency space. The order released Friday morning said a proposed rule change filed by the CBOE BZX exchange earlier this year to list and trade shares of the VanEck Bitcoin Trust did not meet its burden under the Exchange Act and the Commission's rules of practice to demonstrate that its proposal is consistent with the requirements of Exchange Act Section 6b-5. Specifically, the proposed rule change didn't meet the requirement that the rules of a national securities exchange be designed to prevent fraudulent and manipulative acts and practices and to protect investors in the public interest, the SEC said. The ruling is consistent with recent comments from SEC Chairman Gary Gensler, who has preferred the introduction of a future-based Bitcoin ETF rather than one that invests directly in the underlying cryptocurrency. The ProShares Bitcoin Strategy ETF was the first futures-based Bitcoin ETF to launch last month and became the fastest ETF ever to amass more than $1 billion in assets, signaling that there is a real demand for Bitcoin among investors. But higher transaction costs related to the monthly rolling of Bitcoin futures contracts could result in subpar returns for investors in the futures ETF relative to directly owning the cryptocurrency. That's why investors are eager for a Bitcoin spot ETF similar to gold and silver ETFs that hold the underlying physical commodity. The Commission has consistently required that a listing exchange have a comprehensive surveillance sharing agreement with a regulated market of significant size related to Bitcoin or demonstrate that other means to prevent fraudulent and manipulative acts and practices are sufficient, the SEC said. The listing exchange has not met the requirement. Bitcoin extended losses after the rejection, but recouped some of them in mid-afternoon trading. It was down 1.5% to $64,086 as of 3:46 p.m. in New York. The largest cryptocurrency had rallied to an all-time high of $68,991 this week. We are obviously disappointed in today's update from the SEC declining approval of our physical Bitcoin ETF, said Jan VanEck, chief executive of his namesake firm. We continue to believe that investors should have the ability to gain exposure to Bitcoin through a regulated investment product and that a non-futures ETF structure is a superior approach. SEC Chair Gary Gensler has said he's comfortable with future-based ETFs because Bitcoin futures trade on highly regulated exchanges. That's not the case with physical Bitcoin. Although many analysts have been predicting an Ether futures ETF will be the next iteration to reach the market, the physically backed Bitcoin ETF remains the holy grail product. The first application was filed in 2013 by the Winklevoss twins, who are known for getting rich off of Facebook Inc. October's launch of two Bitcoin futures ETFs marked a major milestone for the industry. The first, the ProShares Bitcoin Strategy ETF, accumulated more than $1 billion in assets in just days, while the second, the Valkyrie Bitcoin Strategy ETF, saw a quieter but still vigorous reception. Their premieres built a lot of excitement about Wall Street acceptance towards crypto and raised optimism the SEC might be more amenable toward a physically backed Bitcoin fund this time around. The futures ETF approval made people focus on these announcements a little more. Stefan Ouellet, chief executive and co-founder of crypto platform Front Financial Inc., said on Bloomberg's Quick Take Stock streaming program. Prior to that approval, basically what had been happening is every 3 or 4 months, the SEC would push these crypto ETF applications down the road. So I think they're just getting to that again with a physical ETF. Hester Pierce, a Republican SEC commissioner, said at a Bloomberg conference earlier this month that the regulator has been public about why it's rejected a spot product. She has been a vocal critic of the agency's refusal to sign off on a physical backed fund. The reason is that the Bitcoin markets don't look like our regulated securities markets. She said at the summit on November 4th, the thing that regulators are most comfortable with is markets that look like our own. The rationale echoes the agency's thinking when it shut down a proposed Bitcoin ETF from Cameron and Tyler Winklevoss several years ago. At the time, the SEC said that market manipulation concerns needed to be addressed before a spot product could be approved. Friday's decline comes soon after the SEC cleared the runway for ETF products centered around Bitcoin features. In recent comments, SEC Chair Gary Gensler had expressed openness toward Bitcoin futures-based ETFs as opposed to spot ETFs. As previously reported, several other spot Bitcoin ETF proposals are currently before the SEC. Bitcoin prices had been rallying following the October 19th approval of the ProShares Bitcoin Strategy ETF or BITO and the subsequent launch of the Valkyrie Bitcoin Strategy ETF BTF. Back in 2017, the rejection of a Bitcoin ETF caused prices to plunge almost 20%. The futures-based ETFs are more expensive and less efficient than the spot-based. This is the result of their complicated structure requiring more maintenance, said Vetley Lundy, an analyst at Arcane Research in a blog post last month. Though some analysts fear that this rejection may trigger another bear market for the digital currency, like the kind experienced in 2013 and 2017, others see that as unlikely. Bitcoin has gained significantly more acceptance from institutional investors. In an interview with The Independent, Ray Youssef, co-founder and CEO of Paxful, noted, while this recent price rally can be attributed to movements like the approval of the first Bitcoin ETF for institutional investors, we can't ignore the impact of significant development and adoption in emerging markets. While the SEC doesn't approve a Bitcoin ETF that would hold actual coins, interested investors can acquire BTC in a self-sovereign way. What was once a complicated process is now fairly frictionless. Investors can start small and build up from there. The benefits of self-custody far outweigh the learning curve and enables users to truly participate in Bitcoin and benefit from the network's value proposition. While cryptocurrencies are starting the week on a positive note, Ether, the world's second-largest digital coin, surged more than 4% in 24 hours Monday to hit a new all-time high above $4,700. The token was last trading at a price of $4,740, according to Coinmetrics data. Ether is the cryptocurrency of the Ethereum blockchain. In the crypto market, the terms Ether and Ethereum are often interchangeable when referring to the currency. Bitcoin, meanwhile, climbed 7% to a price of $66,250, inching back toward a record high above $66,900 set in late October. It comes amid growing excitement about DeFi, or decentralized finance, a new trend in the crypto market which seeks to build financial applications like lending and trading on the blockchain. Ethereum is a key player in DeFi. Some of the biggest DeFi services, including decentralized exchange Uniswap and lending platform Aave, run on the Ethereum network. Ethereum is also the backbone for many non-fungible tokens, or NFTs, which are like digital receipts that keep a record of ownership for rare items like online art. They've seen a boom in activity this year, with one token auction at Christie's selling for a record $69 million. Still, Ether is up against some fierce competition. Rival tokens like Solana and Cardano have surged in price this year. Meanwhile, the Bitcoin jumped to a new all-time high of nearly $67,000 last month, following the listing of the first U.S. Bitcoin futures exchange-traded fund. Crypto bulls praised the move as another sign of growing acceptance for digital assets in Wall Street. Alternative digital currencies often rally after significant climbs in Bitcoin's price as investors search for returns elsewhere in the market. This latest development doesn't come as a surprise, as the SEC has made it clear on numerous occasions that it fancies approving a spot Bitcoin ETF at the moment. The regulatory agency has always maintained that it's connected about possible manipulation in the Bitcoin market, and that would affect investors. For now, Bitcoin proponents will have to accept the half victory of the approval of the ETFs that track Bitcoin futures contracts that took place in October and were met with great enthusiasm by market participants. What do you think about the SEC denying VanEck's Bitcoin spot market ETF? Will Ethereum replace Bitcoin? Let us know your thoughts about this video in the comment section below. If you like this video, make sure to smash the like button and subscribe to this channel. To learn more about Answerly and Answerly tokens, check out the links in the description.